Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Greetings everybody guys, now let's take a look at the gold market. So gold market stands in a major tendency that right now holds across the board. So on the Forex market you see approximately the same action, because in every market right now works the same factors. So this is the rising yields of the United States Treasury bonds, rising the implied inflation, and two extended speculative positions. On the dollar they were before the unwind has started, they were at 6-year high. I mean the short positions at 6-year extreme level. On the euro guns it was extremely long, so those of you who read our weekly research probably know that we talk about it every time, that the euro positions, speculative position, highly saturated long positions, and sooner or later that will lead to the closing of these positions and fast opposite action in opposite direction. On the gold market, the same story, guys. There's two extended long positions on the gold market as well. So speaking on technical moments, this week and last week we said that market, to keep bullish chances, it should show some really some support somewhere inside of this swing to keep chance on upward continuation. If market will fail to do this, it probably will lead to drop to the lower body of this consolidation, and potentially it could lead to the breakout to the downside, because guys, actually gold already has taken the opportunity, has taken the chance to break this triangle to the upside, and this chance has failed. So this was a bad attempt to break this triangle. By the classical technical analysis, guys, this calls as the bullish trap. So where within the session market shows the standing above the consolidation triangle, but by the close of the session it returns back down and turns in opposite direction. Currently, guys, market stands at the upper border of our confidence support. It already has been tested twice here, or even 3 times here. This second time, third time, now market is coming to the 4th time. So this confidence support is not strong already, and I think that it's really major tendency will continue. Breakout will follow. So most probable destination point here is confidence and previous lows. It's around 13 even, 1302 area. We have talked about it. It's really very probable, just because, as I said, by the technical analysis, the failure of that upward breakout usually leads to real downside breakout in opposite direction. It really could happen. If this will happen, we could start to talk about the possible kind of the double top pattern here. What we could get today? Today, guys, take a look that on the daily chart market is not ever sold. So there is some room exist approximately inside of this 1310, 1316 areas. Market could fluctuate. On the 4-hour time frame chart, you can see our ABCD pattern. OP target has been hit, minor retracement. It's very small retracement, and indeed the downward action rate to OP was really fast. Next destination point will be XOP. XOP stands at 1305 approximately. So that confirms our idea that probably somewhere around the previous lows, so the next destination point market could reach. Today, guys, we will get the gross domestic product release, and it's really very mixed expectations on the results. So the Federal Bank of Atlanta in the January has forecasted the 4% rise of the gross domestic product in the first quarter. Later, they have decreased the forecast to the 1.8%. Now they expect the 2%. So it means that on average, it probably will be treated as the flat if gross domestic product will be around 2%. So if you trade the data release, keep in mind this level. So the significant deviation from the 2% will probably lead to the significant action on the market. But still, is currently beyond the markets stands really important processes on the unwinding of long-term positions. The gross domestic product release probably will have the short-term impact on the market still. So that's next destination point. Today, guys, we could keep an eye on this pattern, so we can see that some kind of the wedge pattern is forming. If you'll take a look at the hourly chart, it takes the clear shape of the free drive buy. You can see first drive 127, third drive 1618. It's very nice, perfect shape of the pattern. Here is also 127, 1618 stands relatively very close from the second and from the first drives. What I do not like in this pattern, I do not like the acceleration to the downside. Here, very fast drop, and take a look what has happened recently. Drop even faster. Conversely, upward action is very choppy. It's very weak and flat. That's why, guys, yes, currently I do not want to say that it will not work. It could, but it totally will depend on the gross domestic product release. If numbers will be poor, indeed gold could show some jump up here, taking out of this top. This is the minor target of the three drives, approximately 1326, 1327. This could be some action here, but I'm not sure that will be long-lasting action. So some reaction on the poor gross domestic product release, yes, it's possible, but it will be very short-term. Even more, sometimes kind of these falling wedges become patterns for acceleration. So here market could show just a fast acceleration down because, as I said, it's not a reversal. So here it could become very fast dropping. That's why in the current circumstance, guys, what we see right here, this market stands at the eve of the breakout of this consolidation. Personally, I do not want to take any longs position, despite that I see the three drive pattern, mostly because it stands against the context. So if you would like to take this risk, you could try to do this, but taking on the whole environment that we see on the market right now, it's not really very attractive. Because the actually potential to drop here and overall situation with the background and economical background that we see around the interest rates and around the significant demand for the United States dollar right now, it's too much risk for the trading this pattern and too limited upside potential for that. So you could think by yourself, decide by yourself, would you like to trade it or not? Because shape of this pattern itself, it's not bad. It's really looking nice. But I have real doubts that this will work. So that's what we see right now on the gold market. Today we will be watching for gross domestic product release. After the volatility that will stand around this, it really big chances that market will proceed lower. The next destination point will be around 1305.